All right, welcome to Chapter 13 and our first section, which is on recording a payroll. Just as a refresher, remember in Chapter 12 that we looked at how to calculate a payroll for each of our employees and then how we summarize that information in our payroll register. In this chapter, what we are going to look at is how do we record this information, how do we journalize these in our specific journals that we've learned about, how we do that on the back end side of us as a business, how we record our payroll taxes. So let's get into this a little bit. There are different forms of payroll information. For each payroll, we have, or I should say, for each pay period, our payroll information is recorded in the payroll register. We did work with that in Chapter 12. And then for each pay period, payroll information is also recorded on our employee earnings record. So we have two places that this is already located. However, neither of these are in a journal yet. And so one thing we have to remember is that we do not keep separate payroll accounts for each employee in our general ledger. We have worked with different accounts for accounts receivable and different accounts for accounts payable. So it might seem logical that we might have a separate payroll account for each employee, but we do not. The reason being, if you think about like a large corporation like Walmart, for example, who has hundreds of thousands of employees, it's just not feasible for them to keep track of that. So instead, what we do is accounts that summarize total earnings and our deductions for all employees are kept in our general ledger. And this will make more sense here in a few slides when we talk about this. We do have a new account though, it's called salary expense. Salary expense is the total of gross earnings for all employee earnings, including our hourly wages, our salaries, and our commission. So the payroll register and the employee earnings records, they have all the information that we need to prepare our payroll and our payroll tax report. So our journal entries are made to record the payment of the payroll and employee payroll taxes whenever they occur. Also, there are various quarterly and annual payroll tax reports that we're going to have to go through and do as well, because we're required to report the payment of payroll taxes, obviously, to the government. So here's an example of our payroll register. Similar to a special journal, the column totals of a payroll register provide the debit and credit amounts that we need to journalize a payroll. So here we have all of the information that we need, including all of these totals. So we're going to use those here in a second. So what we need to know is that the sum of total earnings, that is our salary expense for the period. So I'm just going to flip back and forth here. If you notice, the sum of total earnings here is $8,007. Let me see here, $8,076.75. That total right there, that's our salary expense. That's how much our employees earned during the pay period. And then the total of each deduction is credited to a liability account, because remember, federal income taxes, Medicare, Social Security, all of our health insurance premiums, all of those are liabilities for us as a business until we pay them. So that's why they get credited. So if we flip back here, federal income taxes credit, Social Security tax credit, Medicare tax credit, health insurance, retirement are all going to be credited to liability accounts. And then the net pay column, which is right here, which is how much the employees actually get paid, because remember, this is what they earned. All of this comes out of their paycheck, and then this is what they actually get paid. That net pay is where we credit cash. Because remember, right now what we're doing is we're actually paying our employees. So we debit salary expense for how much they earned total. We credit each of our liability accounts for all of their deductions, and then we also credit cash. So what does this look like when we actually journalize it? Well, they're going to break this down for you, which is nice of them. So I didn't realize they had this on here. I should have looked. Salary expense here, you can see this is your total earnings, boom, boom, boom. And then we have employee income tax payable, Social Security tax payable. So essentially they take all of your deductions and then they add payable on the end to make it a liability. All of those are credited, and then cash is credited for the difference, which is your net pay here. Okay? So when we end up putting that in a journal, And this is what it'll look like in MindTap. It'll give you this big old nasty thing. It'll say we paid cash for the semi-monthly payroll. So this right here, this is your net pay, what you paid cash for. Your total payroll is your salary expense, and then less all of the deductions. So obviously, since we paid cash, this is going to go in our cash payments journal, and this is what it looks like. We put the date, salary expense, of course, is our debit. That goes first. Your check number, obviously, is from here. And then you list all of your payables. So employee income tax, Social Security, Medicare, etc., all of the credits. And then the difference between this minus all of those is your cash credit or the amount that they say that they pay cash for their semi-monthly payroll. Okay, so hopefully that makes some semblance of sense to you. We're going to take it nice and slow. We're not going to overwhelm anybody. That's all we have for 13.1 is to recognize when we go ahead and we pay our employees. So I'll meet you over in our 13.1 work together video.